Welcome to the Deep Dive, where we dive deep into, the stuff you're curious about.
Yeah.
Today we're going to tackle DEEPAK Fertilizers and Petrochemicals Corporation Limited,
Okay.
or DFPCL for short. We've got earnings call transcripts and investor presentations ready to go.
Right.
Think of this as our detective kit to try to figure out if DFPCL could be a winning bet for investors.
Ooh, I like that I'm ready to put on my detective hat.
Perfect.
Yeah.
Now, imagine we're explaining DFPCL to, let's say, a 10-year-old.
Okay.
What's their elevator pitch? What do they actually DO?
I tell him to picture a giant chef who whips up special ingredients that make other things grow big and strong.
Okay.
Some recipes help plants grow the food we eat, others build sturdy roads and bridges, and some even help make things go boom in mines.
I love it. So not your average kitchen, that's for sure.
Oh, no.
But it gives a good sense of DFPCL's reach.
Right.
Now, let's break down those recipes into their actual business segments.
Okay, so DFPCL operates across three main areas: mining chemicals, industrial chemicals, and crop nutrition.
Makes sense.
They all use core ingredients like ammonia and nitric acid as building blocks for their specialized products.
Right. So they're not just selling basic chemicals off the shelf.
Yep.
They're creating these tailored solutions.
Yeah.
In their investor presentations, they're really pushing this idea that they're a vital part of India's economic growth story. Is that marketing fluff, or is there some substance to it?
There's definitely substance behind their claims. Look at their mining chemicals, particularly their technical ammonium nitrate, or TAN.
Okay.
It's essential for coal mining, building infrastructure, and steel production, all sectors experiencing a boom in India right now.
So as India grows,
Yep.
so does the demand for DFPCO's products.
Exactly.
That makes sense. But they're not stopping at just supplying the basics, right?
Yeah.
They're moving towards offering more specialized, customized solutions. What does that look like in practice?
It's a smart move to differentiate themselves.
Yeah.
Take their mining chemicals segment. Instead of just selling TAN, they're providing blasting services and helping mines optimize their entire extraction process.
Wow.
This shift from being a pure commodity player to a provider of holistic solutions could lead to higher margins and greater resilience against unpredictable commodity prices.
So they're not just selling ingredients anymore. They're becoming the chefs themselves.
Right.
Okay, one thing that really jumped out at me was DFPCL's big investment in a new state-of-the-art ammonia plant.
Okay.
Why was that such a crucial move?
Ammonia is the backbone of many of DFPCL's products.
Okay.
Having their own ammonia plant allows them to control a key ingredient, mitigating risks associated with volatile global prices and potential supply chain disruptions.
It's like having your own farm-to-table operation, but for industrial chemicals.
Yeah.
And we can't forget about their recent demerger,
Right.
where they separated their different businesses into distinct entities.
Uh-huh.
What was the rationale behind that?
The demerger had a few strategic aims. Firstly, it allows each business unit to focus on its own growth opportunities and develop targeted strategies.
Makes sense.
Secondly, it might attract investors specifically interested in certain sectors like mining chemicals or crop nutrition. And finally, it creates more transparency for all investors by allowing them to track the performance of each business unit individually.
All right, so we've got a pretty good grasp of who DFPCL is, what they do, and how they fit into India's growth story.
Right.
Now let's get down to the question on every investor's mind.
Okay.
Can DFPCL deliver those attractive returns in the near to medium term?
That's the million-dollar question. And to answer that, we need to take a closer look at their recent performance and future projections.
Perfect. That's exactly where we're headed next.
Let's dive into their financials, starting with their Q1 2025 earnings call transcript.
Okay.
It paints a pretty rosy picture, especially since this was right after their demerger.
You're right. The chairman sounded particularly upbeat, highlighting a bunch of improvements. There was something about a significant jump in their EBITDA margins, wasn't there?
Absolutely. Their EBITDA margins went from around 12% to over 20% year on year.
Wow.
A huge increase. And their net profit shot up by a massive 76% compared to the same quarter last year.
Wow. Those are some impressive gains.
Yeah.
But what were the main drivers behind those strong numbers? Was it just the general economic upswing in India?
Well,
or were there specific factors within DFPCL's control that contributed to this performance?
They had a few things working in their favor.
Like what?
Their TAN business, for example, saw a volume surge of 23% year on year, driven by increased demand from coal mining and steel production.
Okay.
both sectors that grew by about 11%, according to their CFO.
So DFPCL is riding that wave of growth in India, just as we discussed earlier.
Right.
What about their other business segments? Do they all perform equally well?
Their industrial chemicals business encountered a bit of a snag.
Yeah.
They experienced lower volumes in nitric acid due to an extended repair job at their Taloja plant. They also mentioned reduced demand from a downstream customer that had to temporarily shut down operations.
So a bit of a mixed bag there.
Yeah.
How did their crop nutrition business fare?
Despite some delayed monsoons and higher inventory levels, they
Yeah.
still managed to achieve an 11% year-on-year increase in sales of bulk fertilizers.
Okay.
What's even more impressive is that their sales of specialty fertilizers,
Yeah?
those customized solutions we talked about,
Right.
surged by a whopping 51%.
Now that's what I call growth. It seems like their strategy of shifting towards those specialty products is already yielding positive results.
It's still early days, but the initial signs are certainly encouraging.
Speaking of strategic moves,
Yeah.
let's talk about that new ammonia plant.
Okay.
Did it live up to the hype?
Their ammonia plant is firing on all cylinders.
Okay.
They reported operating it at around 98% capacity, which is pretty remarkable for a newly commissioned plant.
Wow.
This really reinforces their strategic decision to secure a stable in-house supply of ammonia.
That's a big win for them.
Right.
Having that control over a key ingredient will undoubtedly contribute to their long-term profitability.
Yeah.
But let's zoom out a bit and look at their overall financial health.
Okay.
Can DFPCL afford to fund its ambitious growth plans?
Or
Or are they overextending themselves?
that's a critical question.
Yeah.
They did report a debt of around 4,500 crore rupees at the end of the last fiscal year, which is a significant amount.
Hold on. Didn't they also announce those two massive capital expenditure projects?
They did.
The one in Gopalpur for their TAN business
Yeah.
and the nitric acid expansion in Dahej.
Right.
How can they possibly finance all of that with such a large existing debt?
They've already secured funding for the Gopalpur project, which will cost approximately 2,200 crore rupees.
Okay.
As for the Dahej expansion, another 1,950 crore rupees, they have bridge financing in place.
Okay. So they seem to have the financing sorted out.
Yeah.
But that debt level still makes me nervous.
I understand.
Do they truly feel comfortable with their leverage? Especially considering these new projects won't generate any revenue for a couple of years.
Their CFO has repeatedly stated that they are in a comfortable zone from a leverage perspective.
Okay.
And he emphasized that both rating agencies and the banks who provided the funding share this view.
I appreciate the reassurance,
Sure.
but I always take those "we're comfortable" statements with a grain of salt.
Right.
It's easy to say that when everything's going smoothly.
Yeah.
What happens if there's another unforeseen downturn in the commodity markets or some other external shock?
You raise a valid concern. These cyclical industries always carry inherent risks.
Right.
However, DFPCL's CFO did outline a few reasons why they feel confident about managing their debt.
I'm all ears. I need some convincing because a debt of 4,500 crore rupees coupled with those two major projects still sounds precarious to me.
Firstly, their CFO pointed out that their EBITDA would typically be much higher in a normal year. Without the headwinds they faced in the last fiscal year, they're essentially banking on a rebound in profitability.
So a return to normalcy is part of their plan. What else?
They also anticipate a significant expansion of their EBITDA once those new plants become operational.
Okay.
And remember, they've secured a 15-year gas supply agreement with Equinor,
Right.
a Norwegian company starting in May 2026.
Yeah.
This should help them mitigate some of the volatility in gas prices, which can directly impact their ammonia production costs.
Okay, so they have a few strategies in place to tackle that debt burden.
Right.
But we can't ignore the inherent volatility of the commodity markets.
True.
Let's shift gears now and focus on potential returns.
Okay.
After all, the purpose of this deep dive is to assess whether DFPCL could be a good investment.
Exactly.
What kind of returns do they expect to generate for investors? Did they offer any concrete guidance?
Well, they were predictably cautious about providing specific numbers. Publicly traded companies rarely give clear-cut guidance.
Right.
However, they did drop a few hints about their expectations.
Give me the highlights.
Okay.
Is DFPCL shooting for the moon or just hoping to stay afloat?
Well,
What do they indicate?
their CFO mentioned that in a typical year, their EBIT would be significantly higher than what they achieved last year.
Okay.
He also emphasized their commitment to making front-end investments to capitalize on future growth opportunities.
That sounds promising, but it's still quite vague.
It is.
It's like they're saying, trust us, good things are coming,
Right.
without revealing their cards.
Yeah.
But that's where our detective work comes in, right?
Exactly.
We have to piece together the clues and try to form a reasonable assessment. So far, we have a company strategically positioned in high-growth sectors in India.
Right.
They're making bold moves to capture more value. They have a new ammonia plant running smoothly. They seem confident about managing their debt.
Yeah.
Even if it makes me a bit nervous.
It's understandable.
But that lingering uncertainty about the commodity markets remains a factor.
True.
Where do we go from here?
I think the next logical step is to delve deeper into their growth guidance, their strategic objectives, and their track record of delivering on their promises. It's one thing to talk the talk,
Right.
but it's quite another to walk the walk.
You're absolutely right. Anyone can craft a compelling investor presentation.
Yeah.
But ultimately, it's the results that matter. So let's examine DFPCL's past performance to gauge their ability to actually deliver on those ambitious plans. So let's rewind a bit and look at DFPCL's journey so far.
Okay.
They haven't always had it easy, right?
You're right. Their track record has been a bit of a roller coaster.
Yeah.
While they've enjoyed periods of robust growth and profitability, they've also faced their fair share of setbacks.
Right.
Take 2023, for instance.
Oh, wait.
They were hit by a triple whammy of challenges.
Oh.
Cheap Russian fertilizer-grade ammonium nitrate flooding the Indian market, cheap Chinese nitroaromatics impacting their downstream customers, and unusually low rainfall hurting their crop nutrition business.
Wow. Talk about a perfect storm. Sounds like they were caught in a tough spot. How did they navigate those turbulent times?
Well,
Did they just hunker down and ride it out? Or did they make any strategic adjustments?
they took a multifaceted approach, focusing on operational efficiencies, cost optimization, and strengthening relationships with their key customers.
Okay.
They also emphasized their robust risk management practices, underscoring their commitment to sustainable growth.
It seems like their efforts paid off as they've bounced back with strong performance this year.
Right.
Let's zero in on their growth strategy. They're making some bold bets on innovation
Yeah.
and expanding into higher value products and services. Do they have the right ingredients to make this recipe a success?
There are definitely some promising signs. They've consistently emphasized their commitment to moving beyond their role as a mere commodity player.
Okay.
They're investing in research and development, forming strategic partnerships, like the one with Haifa Group, a global leader in specialty fertilizers.
I remember their CFO drawing a parallel between DFPCL and the mining companies they serve.
Yes.
He talked about creating a total cost of ownership model, where they not only provide the products, but also help optimize the entire process. Essentially, they become a one-stop shop.
Exactly. They want to be seen as partners, not just suppliers.
Okay.
By helping their customers improve efficiency, reduce costs, and ultimately boost profitability. They're aiming for a win-win scenario.
And by doing so, they can potentially command higher margins and set themselves apart from the competition.
That's the idea.
But this isn't a quick fix, is it?
No, it's not.
It takes time to build that kind of trust and demonstrate tangible benefit.
Absolutely. It's a long-term strategy that requires patience and persistence. But if they execute it effectively, it could yield significant rewards.
Okay, we've covered a lot of ground today.
We have.
We've explored DFPCL's business model, their role in India's growth story, their financial performance, and their ambitious growth plans.
Right.
But let's bring it back to our listener. Is this a company they should add to their watch list? Is it a potential investment opportunity?
That's the million-dollar question. And as with any investment, it depends on individual risk tolerance, investment goals, and a thorough assessment of the company's financials and prospects. There's no one-size-fits-all answer.
All right, let's give our listeners some food for thought. What are the key factors they should consider when evaluating DFPCL?
I'd say keep a close eye on how they execute those growth plans, particularly their transition to higher margin solutions.
Okay.
Monitor global commodity markets, especially ammonia and TAN prices, as those can have a big impact. And finally, track their debt levels and their ability to manage those large capital expenditure projects without overextending themselves.
Well, those are all excellent points to consider.
I hope so.
So the big question remains, will DFPCL's strategic moves pay off?
Yeah.
Will they be able to ride the wave of India's growth and deliver solid returns for investors? Only time will tell.
That's the exciting part about investing. It's a journey with inherent uncertainties. But hopefully, this deep dive has equipped our listener with the insights they need to make informed decisions.
And that's what the deep dive is all about. We arm you with knowledge and insights to navigate the complexities of the business world. Thanks for joining us on this deep dive into the world of DFPCL. Until next time, keep exploring, keep learning, and keep diving deep.